Today I'll be going over the exact trading strategy that I utilized today that you guys can just straight copy and steal from me that was able to make me 7 risk reward with one trade only today. And let's just get straight into it. So first off, let me hide the indicator real quick so we can go from top down. I always like to start my trade analysis, like you said, usually off the 4 hour. I usually don't go to the daily, but it is important today to recognize on the daily that obviously we are high time frame bullish, and we have to understand where we are in the mitigation cycle here on the higher time frame. So on the higher time frame, you can clearly see we are actually in a daily mitigation cycle here. Okay, so you can clearly see the daily time frame is going to the top right of my screen. So we are bullish overall, but this is what I'm saying. You have to understand when to switch bullish, when to switch bearish, because each time frame is giving you different ideas and directions. And so knowing that we are in a mitigation cycle on the daily, we should be expecting today to be bullish, because this is what current structure looks like on the daily. We have this mitigation cycle here, meaning I'm expecting us to potentially expand higher off today's open. That doesn't mean we expand to these weak highs here though, right? We could just have a fake reaction here and then go lower and sweep this liquidity before going higher. That's okay. But to me, that doesn't matter for today. And the reason why is because, again, we're on a lower time frame. One small little wick candle like this on the daily is a massive, massive move. Almost 2% move on ES, which is crazy. Okay, so this is a massive move on the lower time frame. I don't care too much about if we can hit these weak highs or not today, because that's very unlikely. I mean, this is a massive move. It usually almost never moves 4% in a single day to market. Usually the range is about 1 to 2% on ES, and just know it varies depending on what asset you're trading. Like gold will move more percent or more pips versus things like ES or NQ. All right, so let's get straight into the lower time frame now. So we know we're in daily demand. Let's go to the 4 hour. We know we have 4 hour demand here. Okay, this is the mitigation point of the 4 hour right here, using this sell to buy here. So you can also mark this as well, but I like to usually refine my high time frame POIs, because remember, this is too big of a zone. If you look at this on the daily, that zone is massive. This is the daily zone. Like once we hit here, does not mean I'm gonna be long and long and long and long and long here, right? This wasn't in session first of all anyway, so let's wait until we get into session. So let's delete that daily demand. No, we're in daily demand, and we refine it to the 4 hour and 1 hour. I thought personally the 1 hour looked the best to refine to, so we could use the 1 hour. You can even use this here as well if you want to. It's up to you. Point is just understand we are bullish bias. That's all you need to know. 30-minute, I don't really see too much here, to be honest. You can refine it a little bit further if you want, but 15-minute, there's not much you could do here in terms of refinement here. 1 hour looked very clean. So let's go to the 1 minute finally to look at the entry here. So this is using my stop hunter strategy that I teach you guys within the course. So what is it here? Well, look at this. We tapped into, obviously the 1 hour demand. Where is open? Let me turn on the ETU elite indicator real quick, and it's gonna mark our kill zones. So this is the kill zone for New York session. So we started at 8:30, but keep in mind 8:30 is the kill zone for New York session. But for indices, I like to wait till 9:30 because that's when NYSE opens up. That's when we get the most volatility. So look at where it is. 9:30 opens right here at this red vertical line. All right, so when we open up, we are at the time looking bearish. So at the time when we open up, we are looking like this to the downside. And again, you need to know when to switch your bias. I was clearly bullish here because we're stuck in 1 hour demand and daily demand. So we mitigated the 1 hour, okay? And we had a crazy move off open. Now, I could not have taken this trade here personally, just because for me, it doesn't really meet my rules and criteria in terms of risk reward. Like the first potential area price could reverse off of is this 0.38 risk reward. It's awful, right? This is a very bad risk reward. Yes, you could have held this targeting my typical target that I was gonna expand for really on the higher time frame, but again, not as ideal to me. I was kind of waiting to see if we can get like a OB retracement, or even this one would be ideal, but I highly doubt it, seeing how much momentum we have here. It's very less likely we come all the way down here. So something like this would have been cool for an OB retracement entry model, but we did not get that, so I did not take this trade, unfortunately. If you took this, congrats to you. Depending on which IFG you used, you should be using the extreme one in the leg, so this one. But again, where you break even stuff, it's very tight. So something you want to really backtest yourself and see what you're comfortable and most familiar with. So we were going down to the downside at that point. Now, once we broke above this, it's just a patience waiting game. I'm waiting for a price to either give me a stop hunter or come back to 50%. We don't know exactly all the time if it's going to come back to 50% and then go higher, or if we stop hunter, and then go higher. Sweep these internal lows. We don't know, but I'm willing to take both trades. Why? Because this is a very good sign in a signature in price here. We broke above these highs, so you can consider this now your change of character. Now you can see, also argue that we had a change of character here too, right? But keep in mind, this is before open. It's less volatility. We're moving in a consolidation box here. So if you were expecting a big move, it's usually going to happen after NYSE open on indices. So that's something you want to keep in the back of your mind, because that's going to help you identify whether or not we have too many fails in terms of holding a PY or not. So just adding the puzzle pieces together, like I tell you guys all the time, it's going to help you out a lot in your trading. We broke above this structure that made a new low, right? This high made a new low. Okay, we have breaks to the downside. So this is your change of character here, anticipating upside now, the higher timer to kick in. And then I'm just waiting patiently for my stop hunter SH setup for sure. So let's follow internal structure here. Pullback, made a new high. Cool. Let's keep playing price out. Made a pullback and we made another new high. Cool. So that's my new high or new low I'm looking at, because this low made this new high. Now we went below that low. So this is my sweep, my internal sweep. And I'm expecting prices to do something like this after taking out that low there. Either that's going to happen, or like I said, back to 50% and go. We don't know entirely in the situation, but for me, I'm willing to take both. In case we do fail stop hunter, I'll still take the longs down here. People think like, if this fails, I'm not taking longs anymore. Nope, I'm still going to take longs down here because it fits my criteria for a really good trade. So I took the trade here. Again, all you have to do is really just enter off this candle here. There's not much else to this. It's not like a gimmick or anything. You just enter out the candle closure. And then my stop loss here was kind of big. It was quite big, to be honest, because usually with my setups, all right, I can usually get 3 sword on average and squeeze out 3 sword when I'm targeting just like a nearest week high or low internally. So in this case, it was 2 out of 3, so not even 3 swords. So ideally, my stop loss should be placed here, covering this here, this initial mitigation, or you covered prior to mitigation right here, you can get 4 swords. So either 3 of these stop losses are perfectly fine in my opinion, whichever one you want to use, but I wanted to be a little bit more safe here because I thought this was an amazing setup. So I did cover more in terms of the stop loss space, so I don't get stopped out too early. And again, if you want to use a 50% tool, you can see that clearly, this PY isn't even in 50%. So if I did get stopped out here, I probably would have waited for a PY down here to get mitigated. Unless we have something else on the 5 minute, which I don't think we do. Yeah, we don't have anything in discount on the 5 minute. So that was the entry. You just take it. Your stop loss, again, stop loss or stop hunter, usually you can use static, meaning go for a stop loss that gives you 3 sword, 2 sword, usually 3, which is what ideally back tested. That works the best in terms of risk reward and the win rate average. You want to understand your data. If you guys don't understand your data, you haven't done enough back testing and journaling. You need to know what risk reward and win rate combinations work best for your strategy. For me, I noticed for my stop hunter that my win rate goes down like 6-7%, 6 to 7 by the way, 6 to 7%, but the risk reward almost doubles to 3. So I don't mind risking like potentially getting stopped out early. But in this case, such a good setup, I'm willing to give it a little bit more wiggle room with some discretion here. So taking this here, all you have to do here is just hold. Again, where do you break even? You can break even at the internal high, because this could be a sweep to go to the lower, but using the context clues on the higher time frame, it doesn't make sense for us to go lower wherever that was. I believe here, it doesn't make sense. We're not even mitigating this 1 hour supply here. And in fact, on a 1 hour, all this is just inducement. You can consider this as a potential stop hunter on a 1 hour. So if we did want to go lower and this daily demand does not hold, well, guess what? We take out at least 8 session high and then we go lower. So at that point, the draw liquidity is not as clear, in my personal opinion, as compared to down here where it's very clear. We have at least some liquidity point to get drawn to. So this is why I'm saying, like, on a lower time frame, we're trading on a lower time frame, guys. I don't care if its price is going to go for this high today. It's not going to. I don't care if price is going to make a fake crash or not go to downside, because that's a massive move on a lower time frame that does not apply to me anyway. unless I'm gonna take both sides of the market, which then yeah, you could take shorts here. But the most clear setup, like I said today, was really the stop hunter to the upside. So once you put the pieces together, I mean, trading becomes pretty simplistic in a sense where things become a lot more clear. Now, there are times in trading where it's not clear. I'm telling you, if it's not clear, there's two things that's going on. If your drawing liquidity is not clear, either the market conditions are bad, meaning price action is consolidating in a box, not going anywhere. That's when I personally usually try not to trade either. Or you wait for sweeps on both sides, or either side of the market when consolidation happens. Then you take your entry instead of trading within the tiny little ranges of consolidation. Number two is that you haven't done enough backtesting in live trading experience. So you don't have enough experience trading different types of conditions and price delivery, and that's why you get confused on your draw liquidity. That comes with screen time and experience. But you want something mechanical, like your strategy should have some sort of mechanical entry model, trade management, break even, partials, whatever. I don't personally take partials, like most people know. I just have a break even system, depending on the context, or a setup quality rating, and then a TP. So this is a full 7 RR TP. Like I said, my TP is just at the high time frame inducement 8 session high. You can target also this here too if you're okay with that. Like these highs technically was the last high per se that made this entire low. So you could actually target that high there too. But I mean, the risk reward isn't a huge difference here, right? And this is already a really big trade, so I don't mind just targeting liquidity, session liquidity here. Now that we know what the best setup today was, this 7 risk reward stop hunter setup, I'm gonna go over some examples of what not to do on this day. So trades that you would have made you lose or end potentially red today. So some of you guys may be taking, for example, maybe you're shorting this PY. This is not good. Knowing that we hit 1 hour demand, we're high time frame bullish now. We made this change of character, and you're trying to short here. This is not good. So this is one loss here, potentially, maybe 2 losses, right? You would have given up at that point. That's not a good setup. Do not take those. The second type of potential bad setup would be, I believe it was on the 30-minute. Let's see, we switch time frames and see what's most clear here. Highly doubts the 4 hour. 4 hour PY is too big there. Let's go to the 15-minute. 15-minute. Okay. I think this is where we got the fake reaction from. So this is the 15-minute. If you're shorting this, this is also bad. Okay. So some of you guys are shorting this, and when I say bad, I don't mean mechanically it's bad. I mean your draw liquidity is wrong. Like it's not good, right? Because we're in high time frame demand. So if you're shorting this, this is not an ideal trade to take. Depending on where your TP is, that's where it's important and how you manage your trade. If you manage to break even, this is fine. But I personally still wouldn't take this trade anyway. If you do a scalp trade, this is your B. I'd say probably like a B plus scalp to the downside. So this would have been fine here for a scalp 1-to-1. But other than that, not much else you can do here on this trade. And if you want to take internal continuations, there's your OB. You have your limit order here. Cover the low. And there's your internal continuation. So you gotta caught this trade multiple times. There's 3 attempts to catch these longs, guys. First one, IFG down here. Stop on right here. And let's see. No other stop on right here. Your internal OB continuation. Now you can also wait for a stop hunter of this low, but it didn't happen here. Usually if we have some sort of internal liquidity like this low, not make a new high. So this is things I'm really wary about. I don't like ever taking a stop hunter where it doesn't make a new high. So this low here is not a stop hunter low. Some of you guys are making a mistake considering that stop hunter when it's really not. This low did not make a new high. It has to make that new internal rate structure, but it did not. So you can consider this just internal liquidity for your PY here if you want to take this internal continuation. But like I said, this is a setup I rarely ever take. To be honest, I usually do wait for that internal liquidity sweep. So those are 3 potential setups you could have taken today in any green. Again, bad setup here, mid setup depending on how you manage this trade here. Because this setup is just short here is much better than this short here. Now explain real quick why. Because this has some sort of a liquidity point after it, or they got swept. We have London session high here, they got swept. This is also much more deeper in premium than here. So you could account a potentially a bigger reaction or anticipate a bigger reaction because these are also highs as liquidity. While in this case here, it's just a PY really, to be honest. So that's basically it for all the setups today. Again, if you wanted to trade after, you could have taken shorts to the downside, maybe actually taking out these highs. But like I said, these are counter trend trades, and eventually, it did play out. So props to you. I would say if you want to check out why this played out real quick before you end today's quick little video, it is off the 30 minute. Let's see if it is 30 minute. You might have to refine this too. Actually, it looks fine here for 30 minute. 15 minute, you don't really see much on the 15 minute. The 15 minute PY is actually bigger. In this case, it's here. I personally would not mark that. And 5 minute, okay, so this is good. The 5 minute here is perfect to mark here. So you could refine this to the 5 minute if you wanted to. And if you were to take shorts here, you can still expect some sort of reaction here because we set up 2 session highs or liquidity. And we've done the big massive move to the upside already. So depending on whether or not you refined it would affect if you won or lost this trade. I think these are equal highs, can't really tell there. So if you didn't refine it, you would have took a loss here. And then if you refined it, you would have taken a winner here, depending on how you want to trade this here. And you can just TP wherever you want. Like I said, my TP target, if I was to trade this, would probably be, you either go for a scalp towards this little PY here, not in discount, or you go for a discount, which is down here. There might be something on the 5 minute. Yep, there it is. So I probably would have targeted this on the 5 minute. And the reason why is because on 1 minute you have a PY here, but again, if you're counter trading, aka personally I think this is counter trend here, then you want to be careful because the reason why price reacted here is because of the 5 minute PY. You can't see that on the 1 minute here, right? You fractally cannot really see it. I don't think you can even use a POC to see this. Yeah, there's no POC to see this anyway. So switch your time frames. Remember, 1 minute, 5 minute are very important for POIs. You could have taken, a trade here. If you wanted to play pro trend, this probably would have been a break even. Most likely a loss, to be honest, depending on how you trade this. But keep in mind, time in a day. This is very late in the day. We're outside kill zone. Price can chop more. And looking at how price delivered here, you can expect price to actually deliver not ideal here, right? Because price is already slowing down, showing you signs that it's slowing down here. So what's going to make price eventually all of a sudden like boost up, if that makes sense, give you a lot of momentum. Most of the momentum was earlier in the day. So I hope you guys do enjoy today's little trade recap, going over the 7 risk reward trade you could have taken, and also potentially bad and good setups you could have taken later in the day that would align with my trading strategy and system. I hope if you guys want, again, join the free Discord community. The link is down below. Otherwise, there's a few spots remaining for a course, and then there's 1 spot left for mentorship. I'll see you guys in the next video. Peace.